banks in the world to embrace crypto, to embrace Bitcoin in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months, right? We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank. And now, if I counted the top 10 banks in the United States, eight of them are actually engaged in crypto lending, and they've all flipped their stance in the last 6 months.
Bitcoin Bros have been telling you guys this for years now. We've been in this market since 2016, and this is ramping up fast. What do the next 4 to 8 years look like? Time will tell, but you can see based off what institutions and banks have been doing as of late, the past 6 months, as Saylor just mentioned, buckle your seatbelt. With that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. Before we get started, you guys can check us out at bitcaps21.com. If you guys are interested in any Bitcaps classic Bitcoin gear, you can check us out, bitcaps21.com. Once again, so the current time is recording, Bitcoin is coming in at 93.5K. What do we see? What do we anticipate? Looking at our macro buy, macro sell indicators, we have not seen a sell indication yet, but we do need to get out of these depths sooner rather than later. Could we just stair step? Could max pain look like this? If we just look at this chart from here, could max pain just look like this? Can Bitcoin just keep putting in higher highs, higher lows, but just stair stepping its way up year over year? And this would be max pain for the markets. Like, nobody would be able to predict this. It'd be very difficult to trade. And look at here, like every time you buy a top, so like bear market, nope. These pullbacks here, if Bitcoin did something like this, let's look at the price range. This pullback here would be just a 30% pullback. This pullback here would be another almost 30% pullback. This pullback here would be another 32% pullback. So either way you cut this cloth, guys, you can see that this is a possibility. This could be what's in stage for no massive bear markets. ETFs have passed. This looks very similar to gold's chart. And if we do this, this will stair step Bitcoin up towards that $1 million threshold by 2030. A lot of bullishness is happening in the markets. Look at the latest from Jerome Powell.
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks. And we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks, right, that we regulate and supervise, do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new. And we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal.
Interesting take from Jerome Powell. Terminate customers that are perfectly legal. This happened to the Bitcoin Bros back in 2019. We got kicked out of every major banking institution that we were involved in at one time. Business accounts, lines of credit, credit cards, all the above getting shut down because of Bitcoin cryptocurrency. So it's interesting that the banks are flipping. You see what's going on. This is the Fed chair, current Fed chair, talking about what's happening with the banking institution. We showed you a clip earlier with Saylor talking about what happened with the banks the last 6 months. You're seeing the tide turn. Speaking of Saylor, MicroStrategy, we closed at 188. What do we see? We anticipate. So pay attention to this, guys. We do see this horizontal level that needs to be paid attention to. right here, when we came up and ran up to this in 2024, hit our head, actually had a candle close above this, fell down. This hit a lot of longs, liquidated them, and then blasted up to put an all-time high in. And look right now, it just came back down. This is an ABC correction, and this could just consolidate above resistance. And if we do consolidate above resistance, this is a accumulation zone. The level to pay attention to is this orange line 160. If we fall below this, we could see definite new lower lows. Could we break below $100 again? If this line is broken, that could be in the cards. A quick chart, taking a look at this, you see that this chart has a lot of similarities, and breaking certain levels, having a retrace rally. This could have that pump back up towards almost $300, and then another fall down. So could this just be an ABC retracement going to fall down back to that $100 range? So this is what we see for MicroStrategy. If you have conviction, you need to understand diversification. You can play it, but once you understand Bitcoin and Bitcoin related assets, going all in, well, don't take it from me. Check out what Stanley Druckenmiller had to say.
My idea of risk control is a little non-conventional. I like putting all my eggs in one basket and then watching the basket very carefully. I think, I don't know what they teach at Marshall, but at most business schools they teach, I think, a lot of nonsense called risk-adjusted return and diversification. As a money manager, if you look at a normal portfolio, most people will make 70, 80% of money that year on 2 or 3 ideas, even though they'll have 30 or 40 things in their portfolio. My concept was to put into those 2 or 3 ideas that I had the most conviction in. I was also lucky to travel across asset classes. So I traded commodities, currencies, bonds, and equities. And it gave me the discipline. If I didn't have a good idea in equities, I was happy to have no equities, or the same thing with bonds. So when you have a quiver with a bunch of arrows in it, you can usually find something to put a lot of money into. The only other thing I'd say is too many investors look at the present. The present is already in the price. You have to think out of the box and sort of visualize 18 to 24 months from now what the world is going to be and what securities might trade at. You know, what a company's been earning is ridiculous. It doesn't mean anything. What you have to look at is what people think, what a company's earning, what people think it's going to earn. And if you can see something 2 years that's going to be entirely different than the conventional wisdom, that's how you make money. My first boss used to say the obvious is obviously wrong. If you invest in conventional wisdom, you're going to lose your butt.